One.
Have we ever discussed the Friday Monday indicator? The propensity of the market to end the Friday, end the week on the extreme, and then you get fouled through. You get fouled through, right? Well, sometimes there's a fade, and that's what we have going on today. They bought the dip on Friday. How long will it continue? We'll talk to Tim Quast about it at 8:35. In chat, I need your help. I think Dennis and Mitch are still sleeping. And it's pre-market prep on a Monday.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
All right, let's get the show on the road. We're in the green by 12 and 3/4 handles, 45, 10, 75. The buck is up a quarter, 102.09. Bonds in the red, but a little over a half a point, 121 and 12/32. Crude, a buck off the highs of the session, is now down 63 cents at 82.19. Gold in the red by 660, 1969.40. Silver in the red, triple on a percentage basis, down 24 cents at 23.48. And Bitcoin futures are currently trading in the green. Oh boy, look at that upper right chart. Consolidation, building support, up $75 at 29,165. Well, Triple D, I go 3.5 years without seeing you in person, and boy, oh boy, thanks for that. Thanks for that steak dinner on Saturday night, man. That was a lot of fun.
We had a good night. I came to the D. I think Money Mitch maybe even have a picture for us. Yes, he does. Prime and proper, downtown Detroit. Great steakhouse. We'll give you some props there. They put together. You're looking at 28 days aged meat behind us. Is that how long?
No
they aged
mask
for?
in there, no mask required, no COVID restrictions.
No, last time I was in the States, you couldn't go anywhere. You couldn't do anything. Now, yeah, no, you're good to go. Good to
You
go.
good
You
to
haven't
go,
been
you
in
Across
get
the
since
border,
grilled
they
COVID.
didn't ask
steak.
for a vax card or anything, so good to go.
Yeah, a
Hey,
lot.
well,
Actually, the border was pretty busy, but I got lucky and kind of just flew through there. So 3 questions. Guard didn't ask me too much. That was the first time I was in the States in 3 years right there, which is a crazy thing to think about because obviously I used to cross regularly. And yeah, so, obviously moved 5 hours from the border there a little while ago. So I've been meaning to get down to Windsor, Detroit there, but then wanting to see Joel because I haven't seen Joel in a long time. So yeah, we took Joel out, did some steak dinner. Joel and his wife. It was a great night.
Yeah, it was fun. It's
well,
fun. All right, let's.
DDD has gained a little weight. I'll tell you, I gained a little weight after that steak meal. What do we have? The 40-ounce ribeye?
Well, we no, wasn't it the
I think we went with the ribeye. Was the porterhouse?
tomahawk?
Tomahawk ribeye.
Yeah, yeah.
We went with the tomahawk ribeye, and the reason
Oh,
I
I
look
like the
fat is because
tomahawk.
Joel's skinny.
Joel's
I do
ripped.
look fat in that picture. That's a
Joel's
bad
ripped,
shirt.
man.
Yeah.
I
Yeah,
boy,
a
Joel.
little bit of
That's fat,
belly. I do
period.
see a little
I
bit of
haven't
belly
gained weight. I'm
sticking
just
out
always
there.
been fat.
I should have sucked it in a little bit, but
We gotta get you swimming in that lake or something, Dennis, because
Oh, boy.
Joel's doing us
I've been-
wrong over here, man.
I've been trying to start running a little bit there, but yeah. The problem is, you know what my problem is? Kids.
Oh,
The 6-year-old and the 8-year-old, they
Kids.
just demand like, oh yeah, Dairy Queen, let's go for ice cream. Oh yeah, let's go to McDonald's. Oh yeah, let's go, Wendy's, a nice frosty.
you
I
can't
mean,
be
and
mad.
I like
You
that
can't
stuff.
be mad.
They like it. So you end up doing it. The kids kill the diet.
doesn't mean you have to order something just because they get
You
it.
know how hard it is to go to Dairy Queen
Hey.
and your kids are all ordering ice cream and you get nothing. And then what happens is Natalie's full, so she only eats half
Oh,
her
and you
ice
got to eat the
cream.
rest of it.
So then I'm eating an ice cream and a half.
Oh,
So then you're really in trouble. Yeah,
Hey.
that's what does it. That's what happens.
All right, let's get to the market.
us
Let's
in,
do
Mitch,
a
rein
little
us in.
recap
Oh,
of
wait.
last
Go-
week. So we're gonna do a little recap of last week here.
Yeah.
Last week, a sequence of events, of course, included the policy change of the Bank of Japan, a U.S. debt downgrade, news of increased bond assurance led to a surge, of course, in long-term bond yields, impacting the equity markets negatively through a slowdown, of course, of U.S. job growth offered temporary relief. Experts are still worried about the rapid bond market shifts. Goldman Sachs highlighting concerns about raising back-end rates affecting equities as the markets recently focused on growth rather than their valuations. The yield increase could lessen the chance, though, of another Fed rate hike, as tightening financial conditions might serve the Fed's purpose. So we'll keep on watch to see what happens in the bond market. Of course, last week we got the start of a correction. Is there more to come?
Yes, I think so. And we talked about this, and we have had this absolutely right since last Thursday. Another key reversal on Friday. So here everybody's like, oh, the bulls are back by the dip Friday morning. Everything's good. And I was like, I'm selling more stocks. And I said, I think it's a good ride to sell more stocks into. I sold 2 more stocks on the long-term portfolio. And I just think you got to be taking profits here, because I think we've run a long ways. All the stuff still applies. And the trading action from Friday makes me more convicted. I mean, we rug pulled that thing, Joe, around 1 o'clock, and we dropped 60 handles. And it was looking like a great day before that. So, like I said, the buy the dippers, and for the most part, people don't catch on quickly. The buy the dippers are still lurking. They're like, oh, you just buy the dip, you make money, because, that's what's worked in the last 6 months. What's worked lately is what, it's hard to break that mentality. But you know what breaks mentality? Losses. And people who are buying the dip are now starting to get punished. Do I think we're going into a recession, or do I think, we're going into depression, or do I think the bear market? No, we were downtown Detroit, Joe. It was packed. It was busy. Crazy. SummerSlam was on. It was busy. So I think this, we're going to the bear market. We're going to eventually retest the October lows. I think that's probably not happening. But we are so overbought. We don't just go straight up. What was the NASDAQ up in the first half? Like our first 6 months there, Mitch, or 6.5 months. What were we up? 35% or something? What do you guys want? That's a huge gain.
I don't know.
Huge gain. Huge. So I just think we need a cool off period.
And all people do is complain. They just complain about that, about the economy, the markets. I mean, if you're going to complain now, we ended the year at 266.28 in the triple Qs. And as of the close on Friday, we're at 372. That's in the triple Qs. That's just, that's the big
been a huge run. And you're paying premium prices for all these stocks now. Definitely at the end of 2022, because we had a 1.5-year bear market, end of 2022, there was a lot of stocks that were just flat out oversold. Like we talked about, like the upstarts going from 400 to what, $10? I mean, everything was just massively oversold. We even talked at the end, I thought there was going to be a January effect relief pop. Go back and look at my tweets from December. I was calling you, and people say I called Tesla wrong. But last week, I was calling for a January pop. I thought we'd get a few weeks where we'd have a relief pop in all these names. That relief pop just has continued for the first 7 months of the year. It's now completely overdone. That's all. So I think we need a cool-off period, and I think I'm right, and I think the market is showing that we're right here. So I think rallies continue to be sold here. Not saying you have to sell out all your long-term investments, but I think if you're 100% or invested on margin in this, I think it's prudent to raise some cash here, because we're overbought when the stocks aren't cheap.
You made a comment last week, and also our guests have made the same kind of comments too, and it's regarding the refinancing and housing's just ripping right now, right? I mean, because there's no one selling because they can't move. But you talked about a guy that has a really low rate, and he's got a nice house and he's sitting on it. When is his term going to come up? 24, 25. I mean, there are, and I think that's what the Fitch report. And when I read through it again, they're not looking at the now. They're looking at looking a little bit farther out. I talked to Dana. My older daughter bought a house, and she bought it during COVID. She's got a 30-year at 2.7.
That's unbelievable. It's unbelievable that they do this in the US. They do not do this in Canada. And they don't do it in a lot of other countries. Give out these 30-year fixed. Canada is typically 5-year fixed. That's what they give out because there's too much risk for the banks. The banks honestly are smarter in these other countries. And this is why the US went through this financial crisis that they did. The bank's lending is crazy. Who lends money? What is her 30-year fixed?
2.7.
Who lends money for 30 years at 2.7%? Who does that?
When you have a backing like the Fed does, where they can just print money and let it go burr, doesn't matter anymore, Dennis.
But it does, because you saw what happened in the regional banking crisis. And you obviously saw
the regionals,
smaller banks that had significant troubles, and some went belly up here.
I mean, but how many went belly up?
Yeah,
2 out of like 500 out of 600 regional banks or something like that.
Is it over though, Mitch? Is it really over?
That's the question, right?
We don't know that either.
We don't know that either.
Those regional banks. I mean, you look at a key bank here. It's not like the stock is popping off at all-time highs. The reason this thing's at $11 because they probably got some of those long-term mortgages on their books. It's bad land. The stock, if they didn't do that, would be a hell of a lot higher.
The thing is, we created another housing kind of bubble, right? Look at Toll Brothers. Look at Toll Brothers, man. If you guys don't feel like this is also
Toll
true.
Brothers is the beneficiary here, though.
Yeah,
they're the beneficiary,
and they're going to keep
because there's no supply because nobody's moving. Your daughter's not going to move and have to refinance at 7%. She's there, right, Joel? She's going to sell her house, move. So there's no supply. So we dropped the ball on that. A year ago. I did not foresee how this was all going to play out. You just think higher rates and you think it's going to, knock everything down, especially home builders. But when there's nobody moving because they're all locked in at low rates, that kills the supply, which means you got to build more homes to fit that demand. So they're the beneficiary of all this. But it's a completely different story in other countries. And, the point you were making, Joel, originally is I was at the dinner with a gentleman and his mortgage is up in a year and a half. And I talked about this on Friday. And he's going to, he's locked in at like 2.1. I have a mortgage. I set on my rental property, 1.64% I'm locked in. I was locked in for 5 years though. So, I mean, I've got like a year and a half left on it. So when that year and a half comes up, I have the luxury that I have some money. So I'm probably just going to turn around and pay most of it off if it goes up to 6-7%. But most people don't have that luxury. So, I just figure why I'm not going to borrow and I'm going to go pay it off now at 1.64. It's for like free money, basically, because you can take the 1.64% and put in a GIC risk-free money at like 5.3, 5.4%. But I mean, when these people start coming up, other countries could have a few issues. US not having those issues. But again, the way Canada's getting around it is they're extending the bloody amortizations. So, you got, okay, my mortgage is up. I'm going from 2% to 7%. I'm not going to be able to make those payments. What do? Banker, well, take your 25-year AM to a 35-year AM, and away you go, and you go buy your new car.
Catching on over there in Canada.
They find ways around it. So the banks are just basically undoing everything the Fed has been doing. Obviously, that's, and the car loans, same thing. We took them from 5-year AMs to 10-year AMs. We've talked about this stuff on the show. This is what keeps the party going. They're just borrowing more, extending out those amortizations, let their grandkids pay for their houses. That's how it's working. So it's hard to get really super duper bearish here when banks just continue to find ways to give money to people who really can't afford it.
Well, let's go to Warren Buffett. Maybe he can lend us some money, right? Let's take a look here. Burke B EPS here at $4.62, beats a $3.87 estimate. Sales at $92.5 billion, beat the $82.12 billion estimate. Seems like it wasn't that bad. Looks like 74% increase in Berkshire Hathaway's earnings from insurance underwriting to $1.25 billion. These earnings swelled because of Geico is, of course, a part of Berkshire Hathaway's group and was able to slash expenses. So Geico helping out.
This Burke pop, when Burke ever pops on earnings, it's just because you're not finding out new information really or anything. Oh yeah, they had a good quarter, but it's not like a stock. They own a bunch of stocks. And somebody made the point, if you put your money in Burke, you're putting half in treasuries and half in Apple. So it's just at that point where it's, obviously conservative value investing, But I mean, here's it sitting at all-time highs. They buying Burke on this report and like it's going to go to 360. I don't think so. I think it's the same story. I think you fade it.
And
Sorry,
what
Warren.
about
I love
what
you,
do
Warren. Not
we
long term. I'm not saying short Berkshire Hathaway long term, but we run a long ways here too. Value stocks could eventually start getting hit as well. So, and when you see Burke up 1.43% and the SPY only up
it's
0.25%, it's just it's a fund. It's an ETF basically is what it is. You know, it's not obviously trade like it's closed-end fund. So I mean, what 1.43%, SPY's up 0.25%. Some arbitrage in here. I'm sure there's some arbitrage players probably shorting it, buying SPY against it, thinking it comes in. Maybe not today, but maybe tomorrow, maybe the next day. I think it closes back in too.
what about that? Remember we talked, oh boy, he has too much Apple. Yeah, Warren has too much Apple.
He doesn't,
Remember?
yeah, and he doesn't
Yeah,
care. He's been right.
yeah.
Apple's right there near all-time highs. I mean, look at the Buffett main stocks. Can you bring up the list of all and he's been unbelievable, you know what he's done.
I mean, you have to bring it up. I mean,
bring up bring up his like top 10 holdings in
I
Burke.
could do
Can you
it.
do that,
Like
Mitch?
I could almost do it at the top of my head.
It's Apple number
Apple.
one. Apple had a really bad day on Friday. But here's the forgiveness. I mean, on Burke on Friday, it sold off a little bit on it. You know, yeah, it did sell off, but not nearly as bad as Apple. I mean, it's 40% of the bloody portfolio. You'd think it would like sell off a lot more than that. Now, again, this is his stocks because he has some private companies too. So it's a little bit, you know, like it's not all Burke is 46% of his stock portfolio because he has some private assets as well. And I don't believe that that's accounted for in this. So if you really figure that out, it's not quite, you know, up at that high, but it's a huge, like compared to the second holding Bank of America at 9. He is heavily weighted Apple. Apple had a terrible day.
Why own anything else other than Apple? If you want to trade with Buffett, just trade Apple. Just buy Apple. Invest in Apple.
And maybe you buy the dip. Apple had a real, maybe we should make this conversation. We should talk Apple in a minute here because Apple had a really bad day. It opened, people buying the dip on Apple, guaranteed down $4 and buying the dip on Apple and closes down 9. You know, there are people getting punished for that. It's bouncing here this morning. Probably, you know, Buffett helped, but and the market's up a little bit here too. Go back to the top holdings though, and let's just look at them just curiously because you got Berkshire basically at an all-time high. Apple's not at all-time high, but it's not far off. Bank of America is not even close to all-time highs. Like Bank of America's been a pretty much disaster.
Yeah, but he bought that at $5 in his bathtub when
31.
He was
American Express is not far from all-time highs, 199, 165, but not really that close. Coca-Cola, yeah, you know I don't like staples. Chevron's way off its all-time highs.
Look at the average buy price. That will also help here understand where he got it. It's not exact, right? It's an average, but
yeah, but again, that's irrelevant because of investors who are buying it today are buying at these prices. They're not buying it at those prices. So, I mean, he's a fantastic investor. Yeah. But if you're arguing like I wonder where the Burke is trading. We should find out because there's ways to find that out where the NAV is on Berkshire Hathaway because it's a hell of a lot lower. NAV is the net asset value, like of the holdings, website. And it is a hell of a lot lower than where the stock is trading. You get the Buffett premium in there, but you can see a lot of his stocks are not at all-time highs. Yet Berkshire Hathaway is at an all-time high, and that's just a lot of love for Warren as well.
Just looking at the ETF and giving the reset, boy, that's a big move. Usually doesn't move $5. It even snuck into the 257 handle earlier, but I'm just gonna focus on that high from yesterday. Wow, that's way up there. Ooh, 264.77. Is that the daily? Oh no, I'm looking at Tesla. What the heck's wrong with me? I didn't think it would get that high.
I don't know what you're looking at.
I don't know.
You're telling us you're sleepy. You're sleepy. Wake up.
355, folks. There you go. 350.
All right. I'll wake you boys up. I'll get you awake in here. Let's go and let's talk a little bit about. I know what you two are doing this weekend. Tell the truth. You guys were watching Barbie, baby, as Barbie movie from Warner Brothers Discovery is on track to hit $1 billion at the global box office. CNBC is reporting that. And this achievement, of course, is going to bring Greta Gerwig, the film's director, the first solo female director to achieve this feat. So shout out to the women out there, especially women directors taking over here. Barbie, what's going on, guys? Did you guys go watch it together?
My wife took my kids. I think it was Thursday night last week, so she did see it. She said it was pretty good. She said it was a lot of like sexual innuendo. Like the kids aren't going to grab that, but it was like not.
I mean,
like
they
what you
had
would
to make
think.
it for adults too.
That's what
Dennis,
she said.
adults
You
wanted to go
not
watch
like
it.
think like this. Like she like it was cute, and my daughter, 6-year-old, loved it. But I mean, it was. She felt it wasn't fully even for kids. So she was a little bit
Really?
It's
like
created for all ages. Remember also the rating. Also, it's not rated G.
What
And
is
I
it
think that's
rated? I didn't
another.
know that.
I think it's PG in
PG,
here, and
yeah.
so it's not rated just for like just
Right.
kids. Let's just be honest. And I think that they kind of had to include a little bit to have some adults go watch it, right? And so
Maybe that's what it
eh,
is.
Are we gonna
it's a
get in
little.
trouble for this, Mitch? For
No, you're just showing a
We're
trailer.
advertising for their
We're
show.
just showing a trailer. This is the trailer. It's
Okay.
It looks like I want to watch it. It looks pretty fun, actually.
my
The
checks
Mattel
on
trade is over.
my checks on the
Sorry.
ground are saying it's pretty controversial. Is my checks on the ground? That's what they're telling me.
I
Like,
think you're getting a Mattel pop here because there was some numbers that came out that looked pretty good over the weekend here, and it's popping up here. I think the pop probably gets fade here again. You have major overhead supply at 21. The catalyst in the run up to the event is now gone. We knew the movie was going to be doing pretty good. WBD had a day though on Friday. I don't know what happened on WBD on Friday. So that's a different story than Mattel. Is there something else happening there? Because I find that hard to believe that was off Mattel.
This is Barbie squeeze. They're just squeezing it.
Is that what it is? It's Barbie squeeze?
It's the Barbie squeeze, man.
Nobody was thinking about WBD because
no, they were already. They were already. It's just what I think it was. It was sleepy, and somebody went big on it. Somebody went big on it here because this has been sleepy for now.
It never ran up into it.
It didn't really run up.
Like Mattel, everybody's talking Mattel. Mattel ran up into the report. You had the Dumb Money Show talking about it. Like everybody, that was probably Chris Camilo was one of the first all over the Mattel trade. I mean, it had a big move, but not that many people talked about the WBD. You talked about it, Mitch.
Yeah.
So maybe it is the sleepy trade, but I find that almost feels like a headline or something on Friday because that was a really outside move.
Also, you got to give them
WBD close enough to.
You got to give them a little bit of the benefit of the doubt too. I don't think anybody thought it was going to cross this 1 billion mark. And so this is a production studio, right? WB Production right now with the kind of strike that's going on. This makes their production studio look really good while the other ones are struggling. So that's another thing that I think comes in here and helps. Now that they made the Barbie movie, they're probably looked at a little bit better that they could come out with another good movie after this.
I mean, this is such a, forget about all the movies, forget what they're doing, forget the history of the stock of WBD. This has to get above 2070. You have a move like you had March, you're under $15. Yeah, I'm talking Mattel here. I said this ahead of the report. I mean, look at all the lows that you had in that area. It was defended.
Which number?
Mattel, the 2070.
I know Mattel.
Yeah, 6 lows.
What? Yeah, but you're saying 27? No, what level are you saying?
2070.
2070. Okay, you got me messed up because I heard 27. So 2070. Okay, it's above there right now, Joel.
Okay. I look at it as resistance. I say yeah.
I think so too. I think you're selling the Mattel pop here today. I'm sorry. I think a lot of people were in this trade, and I don't think the people get out fast enough. And I think there's going to be people on the other side that get hurt on this trade. I think it could end up back at 18 or 19. So I just see the catalyst being gone now. This is the aftermath, and yeah, we're going to say maybe the numbers are going to be really good for Mattel. So maybe when it comes around to report next quarter, well, that's 3 months away exactly. So I just think that maybe the WBD is squeezing like Mitch says. I don't think that's happening with Mattel.
Dennis, watch your bids here. It seems we're leaking here. Nothing alarming or anything. We are 16 points off the high of the session. The thing I mentioned at the beginning of the show about the propensity of the market to finish the week either at one extreme, the high or the low. Well, we definitely finished at the low end of the week, actually lowest we've been in about just over a month. But the bulls have, as we speak right now, the bulls have defended that low. But that's an important level. Not much underneath that low from Friday, but so far the bulls waking up, defending the S&Ps early.
And I just want to mention there really quickly, we don't got to get into too much of it, but CNK also getting a lift on this. A lot of analyst notes on that one. So keep your eyes on Cinemark if you see that getting the lift on this.
That one's going here too, but
Yeah, now I want to move us over to Sage Therapeutics, and looks like, of course, not doing the best here. They're really getting destroyed, man. This is why I can't do these biotechs, and personally, I stay away from these no matter what. Just the risk and return. Yes, there could be a return that can make me, but there's a lot of returns here that could break me. EPS here at a $2 loss, $2.68 loss. Misses also the estimate of $2.55 at a loss there. Sales also missing here. And then, of course, plummeting after the FDA declines their drug here for what they were the intended purpose here. So Sage really getting hit hard.
It's hard to trade a biotech technically because the amount of random news that hits, especially if you're taking them overnight. I've always said, like, I'm even scared, like, on arbitrage trades or anything like that. It's just like one stock can really make or break you. I'm even scared to trade them after hours a lot of times because, you see, oh yeah, it's coming off. And then, all of a sudden, well, there's a trial coming or there's something, or somebody knows something ahead of time. I mean, holy mackerel, this is just a disaster today. And they had something approved here too. Part of it was approved and then part of it wasn't approved. I don't follow the company close enough for these drugs close enough to know like what the revenue sources. But this is a huge shellacking for Sage. You're now breaking down to, I don't even know. My chart doesn't go back far enough here. Is this an all-time low?
Oh, you're below the COVID low.
Are we all-time lows on Sage?
I don't know how long this has been around.
I'm going back on I'm going out back my other platform. This one goes back 10 years. That's a new 10-year low.
No,
but we're going to go back further here.
I don't think it's been around that long. I think
so it's going to be a new all-time low.
Yeah.
Yeah, guys, I got you. All-time low for sure.
All-time low for Sage. Wow.
You're below 2014 levels, and that went to 24.25.
Yep.
I mean, it's going to open with a $1 billion. It was $2 billion market cap when it closed. It's going to open with a $1 billion market cap on this thing. So this is now just speculative money.
The ugliest head and shoulders I've ever
speculation seen. Now, like it's a lottery ticket. It's a zero or it's something.
Look at this thing tank
pre-COVID.
This is the
ugliest head and shoulders pattern I've ever seen in my life.
Yeah, it's like a head and shoulders, head and shoulders, head and shoulders on top of head and shoulders. But just just being my contrarian self, if I was short the stock, I would be saying to myself, man, I don't think I'm going to get this at the pre-market low at $16.99. That's just down 48%. I don't know, company going out of business, but
we don't know if that's they got part of the drug approved. Part of me wants to buy the dip on this. Part of me wants to buy the dip.
Oh, yeah.
But I've been burned so badly buying the dips on beating down biotech names that like one spitting, twice shy. I'm like 3 times shy to buy the dip. Like naturally you think, oh yeah, this is part of it got approved. It's not that bad. Let's buy this dip. Well, that was at 20 and then 19. Now it's in the 18s. Like you said, it got down to the 16s. It's bounced a bet. Ooh, this is just scary.
I can't touch this.
High risk, high reward. We'll say that. That's a good summary. High risk, high reward.
High risk, high reward. And you have people that know a lot more about these stocks.
That's it. That's the problem. Adam Feuerstein, who we've had on the show a lot, he follows these companies. We can get some commentary. We can bring Adam back on. We haven't had Adam on the show.
I've tried.
He's busy, man.
Yep.
We might try again. Adam used to come on all the time.
Yeah, Adam ghosted us, and who's that other guy that the retail guy?
Reach out to Adam again. When's the last time you reached out to Adam?
You reach out,
always
Dennis.
Really good on our show.
Dennis, you're the.
You want me to reach out to Adam?
Yeah,
we'll get him on, guys.
Yeah, Dennis, why don't you do the
Mitch will try to hunt him down. Adam Feuerstein.
Yeah.
He's come on our show back like 3-4 years ago. He's coming on once a month. He's been on our show a lot.
We'll get him active on Twitter.
But sometimes the problem is these guys get so big that they get exclusives, and we're not allowed. Like
they don't want to come. Yeah, I know.
Well, the companies that they're working for sometimes won't let them.
Yeah, that's how it goes.
So it's not even them sometimes. Sometimes the companies that they're working for. I don't know if that's the case with Adam, but Adam Feuerstein, he's a gem, man. He knows his stuff.
I just happened recently with a female reporter, big time. She started following me on Twitter. I'm like, wow, she's smart, good articles. And I said, hey, you want to come on? She's like, sure. And then I sent her a date, and she's like, oh, I'm sorry, I can't come on your show. You guys are getting too popular and everything. I'm like, okay.
I think getting too popular. We're not this.
The president of the network.
I'm gonna reel you in today.
Bring us back,
rants all left and right. Let's do multiple topics without a rant. Let's go, guys.
Go.
All right.
I'm waking you up, Mitch. Oh, Mitch was like,
oh, Joe, you got me awoke now. All right. You got me woke.
He's
Tyson
woke.
Foods here. Let's see the
Eat
chicken.
more chicken.
Chicken.
you guys
No,
don't
no,
eat enough
no, no.
chicken.
It looks like they're eating less chicken because, man, you're getting destroyed right now. Q3 adjusted EPS at a 15 cents misses the 34-cent estimate. Sales of 13.14 billion misses the 13.78 billion estimate. Not looking good here for Tyson Foods.
Oh man. It seems like Tyson always disappoints. Look at last quarter from 60 to 50. And then the 3-day rule. You got to wait 3 days. Look at the perfect 3 days and bounced on the third day. You got to think it comes to 52. I don't know. Like I start thinking, well, 50 again. Tyson Foods. And again, consumer staple, 3.69% dividend. Earnings weren't great. Treasury's sitting there with a 5.2 or 5.5% yield, depending on how far you're going out. That's an alternative there. So Tyson Foods only 15 cents missing earnings and stuff. Safer and better places for your money than Tyson Foods. No, thank you.
Yeah, we didn't order any chicken on Saturday night. I don't even know if they had chicken on the menu.
That's what happened.
You don't order chicken at a steakhouse, that's for sure.
Man, this 52 area, you're thinking, yeah, there was a couple lows at 51.20, that area, but maybe hold out over the next couple days. This is the only area multiple lows under $50. I caught, I'd be tempted at 49.50 much more than I would at 52.10. To see, just because you had multiple lows in that area. And then I always forget, what's Pilgrim's Pride?
PPC.
PPC. Do you have any other chicken stocks? No, that doesn't.
Archer Daniel Midland.
That's not a chicken stock.
Do they got chicken?
No, they're doing a lot better. How's Beyond
Tyson's
Meat
and PPC are the two big ones.
How's Beyond Meat doing? Quiet. We haven't mentioned that. We don't even talk about their earnings or anything.
Well,
Beyond Meat.
Let's just say I've been trying to short Beyond Meat since 200. So I'm gonna stay with that one. That
should be done by now.
Fake meat, fake profits, man. That's what I say. But hey, I'll keep moving. Let's go to some notable analyst ratings today. So we're gonna run through some of these really quickly.
Wait, before we do that, I'm sorry. Remember when Calmine Foods had that absolutely crazy quarter, Dennis?
Mm-hmm.
Remember that? Was that last quarter?
CALM. They were killing it. That stock's way down from there.
What happened? Was it just what quarter was it? They
where are their earnings now?
Was it the eggs or something?
Eggs, yeah.
Yeah, was the eggs run.
They're still doing well. They just reported
run.
They just reported last week, Tuesday, 227 versus 215. But it's not like it was. Those egg prices were exploding.
Those eggs were going.
Everybody knew that was just a one-off, though.
I think ever since then, I've lowered my egg eating. Like, I don't even eat that many eggs anymore. I don't even buy them in the grocery store anymore. I've gotten to the point I'm just like, I got over it.
I've never really understood why this is trading with the valuation that it is. And maybe it's just because it's propped up and those earnings are not sustainable here. But it's got the 11. Is that right? It has an 11% dividend. Is that right?
Yeah, I remember you mentioned that.
Yeah, and obviously it still continues to go down here. So I just don't know if those are like sometimes, like PXD does the dividend, they change it up all the time. I don't know if Calmine is they always do the same dividend there, but when you bring it up, you see 11% dividend. You're like, ooh, that's nice. Then you see the PE of 3, you're like, ooh, that's nice too. But again, it's on egg prices.
We're gonna need 3D chicken eggs. 3D chicken eggs coming soon.
Egg whites
coming soon.
Yeah, egg whites. That's what I eat.
All right, let's move forward. Let's get to these notable analyst ratings for the day. First one, Truist Securities upgrading Camping World Holdings to buy. What do you guys think about that? Who's going and buying a camper now? If you didn't buy it in 2020, you're telling me you're going to go and buy it now?
I don't know if it's a valuation call. I think CWH last time I looked trading with a pretty low PE. Maybe it's just a value call or something. Let's go look. Man, PE on this. PE forward's 19, so that's a market multiple, which isn't fantastic by any means. Stock got killed.
What happened on the second?
I don't know. Must have missed earnings or something, maybe 3 days ago. I'm a smart man, but I don't know a lot about camping.
I don't know. I don't.
73 cents versus 81 is a big miss. So why do you want to upgrade? Are they upgrading to neutral? Or are they upgrading to buy?
To buy.
I guess they're buying the dip.
They're buying some dip. They have to know something I don't know.
Companies missing earnings.
There's no way I'm putting a buy on this in this current environment. With interest rates that high. Remember the price tag of some of these RVs, right? calculate that with the interest rates that are this high. Who the hell is buying an RV in this interest rate environment?
That's why I don't understand Winnebago either. WGO, I've not understood this, but it continues to just hang out at the highs. Winnebago, I don't know. Gas prices are climbing back up too, Money Mitch.
Yeah,
What
I
was
don't
it?
get this
I
trade
filled up
at
in
all.
yeah, $1.67 a liter in Canada now. That's approaching like the highs. Like this gas price is, I don't know if it's doing that in the States too.
It is.
But the gas prices in Canada are not far from where they were back, a year ago when we were all complaining about gas prices. They are creeping back up. And it's a little bit of a jaw dropper now. When you fill up my minivan, I'm filling up them over $100 in gas.
What do you think about this chase here on UBS upgrading Wayfair to buy and raising price target to 110?
Late. Very, very,
110,
very,
man.
very, very, very late. The stock was $30 2 months ago. It's $85. They are so late on this one. With that being said,
late,
there's a squeeze happening in Wayfair, though. The reason that Wayfair is up as much as it is this is another one of those squeeze stocks. It was on the list. We know we go to highshortinterest.com and look at those lists. And that's where a lot of retail traders go as well, because that's what they were doing back when they were squeezing everything 2 years ago. The squeeze is on here. It's a long ways from all-time highs. I'm scared to short this stock, but if you're in this, it went from 30 to 85. You got major resistance going to be at 90 now.
Dennis. It went to 90.71 2 days ago. And
I know.
Good levels here. High close in the move made on Thursday, 84.67. You're just above that now. I'd see what happened at Friday's Friday's high, 86.92. I can't make it a 3-star because there's only been one high there, but that'd be a good target. Bosu there, well, maybe 90.71. That's the high in the move, but also, I mean, you look at the top right chart and you're like, holy mackerel, man, what a move, 35 to 90. This thing is overdone. But then you look at the bottom left chart and you're like, well, baby, 369 down to what, 40? How low did it get? 28.11? Wow. Maybe it's just getting going, but
they better be selling a lot of furniture. Let me just say that much. Let's keep going.
My wife buys some stuff on there.
We buy some stuff from there.
I bought some stuff, but there's a whole nother ball game. I think going from 30 to 110. That's
just
a little
went
bit
up
of a
so
push.
far. Where were you upgrading this a month ago when it was 50 or 40 or hung out at 30 forever? The train has left the station, and I'm not sure it's not the long black train. So I am not a fan of riding the W black train.
All right, let's go ahead. Let's get to Market Structure Mondays. All right, Tim Quast, of course, founder and Market Structure Edge. How are we doing today, Tim?
I'm well, thank you. And I think Ride the W Black Train is a Bob Dylan song, I believe. I believe it is, yes.
Taking it back to Bob Dylan days.
What song? What Dylan? I love Dylan.
It's a deep
song?
Yeah.
Tim, do you have us on the background? We're getting a little feedback. I'm not sure if you can.
I don't, but I don't have a mic on. So if you want,
you're
I can put one.
It's not bad. It's okay. We can be okay.
If you're in your car, turn down your radio.
That's what he always says.
No, I'm sitting in the conference room. I just decided I wouldn't use the earpiece, and sometimes that's a bad decision. So anyway, nice to see you guys. Yeah, happy Monday.
Tim, what do you think of these markets here? Because we have I've been arguing for the last 7 days here now that I feel like sentiment has turned to a certain extent. It's turned to profit taking, where we've had such an incredible first half. I've argued the back half is not going to be as easy. We've seen now a couple of days where the market has been up and the rug pull has happened. We saw it a week ago from Thursday, and then we saw it on Friday as well. We were having a fantastic morning on Friday. Then they pulled and they dropped at 60 points. It feels like the rips are being sold and the dips that are being bought are not holding here now. It feels like something has changed.
Yeah. And I'll tell you how we think about this from a market structure standpoint. It was probably, has it been 3 weeks now? I think 3 weeks ago, roughly, we all talked about this NASDAQ 100 rebalance. And for those, just as background, so the NASDAQ got concerned that there's too much weighting in the largest 7 tech stocks. And so they basically shaved 12% off of those in their index weighting and sprinkled it down through the remaining 93. And we were talking about that. I want to say it was the week of the end. The Friday would have been the 14th. So whatever the Monday would have been, it was that long ago, almost a month ago. And we talked about, well, how could that? I mean, could that be a problem for the market, because the market is so dependent on that largest 7? So yes, from a market structure standpoint, Dennis, things changed. And I'll show you. And it's interesting that on July 11 was the day that the way we look at the market, the way we look at supply and demand, that the market is driven by supply and demand. And when there's excess demand and insufficient supply, stocks rise. And when those conditions deteriorate, they fall. By the way, here's Wayfair. I might as well do this since I pulled all 3 of those stocks up. Just a quick aside. If you want to think about stocks like that and wonder what is happening behind price and volume, which are consequences. Price and volume are consequences of the underlying supply and demand. And the demand comes from purposes with different time horizons. It's not all the same. Everybody isn't buying and selling the market for the same reason that you are. And so, you traders, right? So look at Wayfair. It's had excess demand. This is demand here, and won't lose my train of thought. It's 10, and it remains well above 5. So if you look a longer term, keep your portfolio weighted towards stocks that are above 5, and where supply is trending down. And that has been true for Wayfair, certainly across this 30-day period, but it's been even longer. And this is why it popped, Joel. There was a big drop in supply. Short interest, folks, if you try to squeeze high short interest stocks, be careful, because you're not recognizing how the stock market works. Most of the shorting in the market comes from market makers who are exempt from having to locate shares to short. Their job, the SEC has decreed, is to make bids and offers of 100 shares. What if no one underneath that who actually owns the stock offers any for sale? How would you have stock? Well, market makers just create it, like the Federal Reserve does in a reserve banking system. Okay, now back to the point. I want to go to the broad market sentiment. I said on July 11, here's where we hit the red line. July 11, price of SPY was 442. Statistically, and we measure data, this is what we do, we're a data analytics firm. Statistically, the probability that the market will be higher a month later is below 0. Now, it doesn't happen every time. What happens in between can be very distorting. So right now, we go from July 11, ahead of that NASDAQ 100 rebalance, 442, and on Friday, we were at 446. We're almost back to July 11. And notice that this is demand. The green part of the graph is an algorithm. It is measuring buying and selling by investors and how it affects average prices. And so we can measure buying and selling. And then this is SPY, the price of SPY. Notice that they track each other pretty well, gives you some predictive capability. Now it's falling. Here is why the market is deteriorating. Very simply, demand is falling and supply is rising. That you can see.
That combination.
See it coming. Now, why is that occurring is the big question. And here's part 2 of my answer, and I realize it's a long-winded answer, but I think that this is important. We can, over on the corporate side of the business for public companies, we measure patterns of behavior in the market. And so when you see a big purple and green pattern in the market like this, that is started after the 24th. The 24th was when the NASDAQ rebalance took effect. Following that, this pattern of green and purple, this is exchange traded funds like the triple Q. This little bit of blue that you see in there, that's closet indexers. This is the supply demand balance in the S&P 500. It deteriorated dramatically. Back here, we had more buying green bars than selling red bars. Now we have a lot more heavy downside pressure coming from ETFs. There is the rebalance effect, and it hasn't finished. Now, I don't know, it might be fine, but you could look at that data, and then if you're an edge user, edge mob, you look at deteriorating demand, you know we're above 6, you know we're unlikely to continue to go higher because that's what the math tells us. And now supply is rising. Well, those are all reasons to stop putting money into the market. Really, it's simple. Do I do it? No, I still try to trade. And so then I get stopped out more. And you wonder, well, why am I getting stopped out? There's a very simple mechanical reason for it. When there is excess demand, all the intermediaries will lift the offer to sell. They'll sell stock to you at a higher price. When the supply-demand balance deteriorates and volatility diminishes, why the VIX is a lousy leading indicator, it's a lagging indicator.
Yeah.
Now what are they going to do? They're going to lower the bid. Well, what will happen? You get stopped out. So how would you avoid that? Well, you go, well, I guess I'll just take my money out when this thing starts to deteriorate and this thing starts to rise. Maybe that'd be a good reason to go park my money in cash at 4.5%.
Or the alternative is like the market works two ways, and I buy stocks and I short stocks, and some people don't like shorting stocks. Some people think it's completely un-American to short stocks, but you know what? It keeps the market efficient. And I mean, shorts are working better right now. I'm not going to lie. They did not work well in the first half, but they are working a lot better right now. Blindly shorting the rips on some of these pops on these stocks is working. It started working a couple of weeks ago, and it continues to work very well. To Friday's point, anybody who was shorting Monday morning or Friday morning was probably making a lot of money by Friday afternoon. So where the shorts have been losing, they are starting to win again.
Yeah, this
Agreed.
is where
I shorted the market last week too. Now I do it in a very low risk fashion, which you can do too, traders. I use SH. So it's a short S&P 500, very liquid vehicle. It's not going to give you massive returns. But, if you short a couple thousand and it's very liquid trades, there are oftentimes 1 million shares at the bid and the offer. You can fill any size trade.
Yeah,
so it makes it very easy to do that. And when you see this, you can just say, well, this is starting to tick down. Don't worry about what the price does next. You already have a leading indicator that tells you demand is deteriorating and supply is rising. That's when I did it. I put a short on right there. I closed mine out last week, but I may put it back on. I can always come back this week and see how things look. But yeah, I agree with you, Dennis.
Now I want to take a look. Of course, it seemed like even on Friday, I was drawing it out. I was drawing like a rectangle on the pattern. It seems like we're getting a lot of range moves from the bottom to the top of the range. And with that, of course, comes a lot of stop outs I've been seeing, of course, on live trading. Why do you think we've been seeing a lot of stop outs, Tim?
Well, it's exactly what we've just been talking about. And by the way, this is what I do. So I bought McDonald's on Friday near the close, and I don't know how it's going to go, but here's what I do. So here's McDonald's MCD. It's got demand at 5. So all these are 5s. This is the low volatility portfolio, and so it is a low volatility stock. All the low volatility hedging portfolios are going to have stocks like this, highly liquid. They trade a lot. They have the big trade size. That's what this is. Dollars per trade, big trade size. To get into the top 500, you got to have about $5,000 per trade. So these are all very liquid stocks, and MCD moves 1.4% every day, high to low. So it's at 287 now, and so it was 280 last week. It was 289 and it dropped to close to 287. I thought, well, I'm buying that, but all I'm after is 70 basis points. And to answer your question, Mitch, I know I'm at higher risk now because traders are more likely to lower the bid than raise the offer. All right, so I have to shrink my expectation of return. Now, before I would say I want 1%. Well, now maybe I just want 50 basis points on that. You say, well, is that even worth it? Well, 50 basis points a day isn't bad if you can get it. But you have to realize that is why you're getting stopped out more, traders. It's not complicated. It's not a failure of data. It is simply the mechanics of the market. And as demand deteriorates and supply rises, what happens to prices? They fall. And so you have to realize you have to change your expectation. I'm not going to make much there, but take it. Okay. And let me give you a case in point, my own situation, because I think it'll be helpful for you as a trader. I traded Upstart on Friday. So I think it's still in here. Yeah. So Upstart is a very volatile stock, 9% volatility. So when it was down 8% on Friday, I'm like, well, that's all of its volatility. I'm buying that. But I put my limit up 4%. Half that too much in this market. It immediately went up $2, roughly 2%. So I should have taken that. And instead I didn't, and I got stopped out. Now I didn't lose much because I had a very low, I only put it down about 30 basis points, but the bid was lowered and my order was filled on the downside. I should have taken the 2%. That's what you do when you know supply and demand are deteriorating. All the data are there. They can tell us what's going to happen, but human beings are greedy. We want more. So you just have to temper that. Yeah.
I mean,
what about timing this market real quick before we let you go, Tim? I mean, because, I can, I know Friday, oh, what an easy day. Well, it wasn't an easy day. I mean, I got frustrated, on the way up, and getting stopped. And then I just said, okay, I'm just, the market's going up today. And then you step away from your desk for an hour and a half or 2 hours, it completely comes unraveled. So, I mean, really, and I'm like, what's going on? What's going on? What's the news? Well, no news or anything, but just talk about how difficult it is to time the market. And if you have any, whether it's short term, longer term, I don't try and do it longer term, but just talk about the difficult task of timing the market.
Right. And of course, the orthodoxy is that you can't time the market. All of the advisors will tell you, present this data saying, well, if you miss out on the best, 5% of days, then you don't have any gains, that you can't time the market. Well, I believe that you can. And that you should. And it's not that you're timing the market, you're merely using data to know when, just like in any environment. Is it a good investment environment in private equity in this thing or that thing? You will know when those conditions change. Not a great time to invest in EV now in private equity. Back up 2 years ago, 3 years ago, it was. Well, the same principle applies in the broad market. And again, we're data analysts. I ran data personally with we have a utility that one of our engineers built, and I can put in parameters, and I ran 3-year data using low volatility stocks, and that portfolio produced a 58% return over the trailing 3 years, August 2020 to present. And I'm getting to your answer, Joel. And over that time, SPY was up 27%. So I could double the performance of the market, but that's not what mattered. There are 796 trading days, August roughly 4th, 2020 to August 3rd, 2023. And I produced that 58% return in a model. It's not, models don't necessarily jive to reality in 335 days. So I had the remaining 420 some days where I could do something else with that money, maybe put it into real estate, into private equity, this thing or that thing. So can you time them? Well, you should. You shouldn't have your money at risk when all of the data are telling you that it's going to deteriorate. And what I used for the risk overlay was simply this broad sentiment. When it rose over 6, I took my money out. When it bottomed and returned to rising and supply fell, I put it back. Pretty simple model to run. And so I believe, Joel, that it's wise to be aware of broader risk and to reduce your exposure to the market when it presents higher risk and increase your exposure when it presents lots of opportunity. But it comes back to understanding how the market works and what the money's doing.
All right,
I mean,
like
that's
always.
the point to pre-market prep, just to sum up, is we try to be a market timing show. I mean, if you want, and I think from a long-term investments perspective, dollar cost averaging over the course of 30 years is probably a good way to make money in the long run. But if you're tuning into this show, it's probably because you like trading. It's probably because you want to learn to time the market more. I think what Tim is saying, it is possible to time the market. Not everybody has to do this. If you have a day job, you've got to put your time. If you're trying to be a full-time trader, your job is to time the market. So your job is to look at all the facts, to look at, this, and this has been my job for 23 years. I'm a full-time trader. I am a market timer. It is my job. I'm going to be wrong sometimes. I'm going to be right sometimes. If I'm right more than I'm wrong, I make money. Or if I make more on my winners than my losers, I can still be right, even though if I'm wrong more than 50% of the time. So market timing is possible, is what Tim is saying.
Yep. And to a shameless plug, at noon Eastern time today, I'm doing an interactive brokers webinar that is basically on that topic. It is about using volatility and supply-demand imbalances for short-term gains. Very much about timing the market. Look, and it's not perfect. There's no perfect system. But if you stack the probabilities in your favor and you're happy taking singles instead of home runs, you can be very successful. And so I'm going to talk about that at noon Eastern time. Interactive Brokers, you can find it that way if you want to join.
All right, Tim Quast, founder, CEO, Market Structure Edge. You guys see the link in the chat. Get your free trial today. Thank you, Tim. Like always, good to have you.
Thank you. Good to see you guys. Have a great week.
Sam.
All right, let's get back to the markets. How we looking, Joel?
Rebound at basketball. We are back up near the highs of the session. 45.22 is your high, currently trading 45.18. So when I told Dennis to watch his bids, I should have been telling them to place bids.
Yeah, I guess so.
We're thin on the upside. I don't have a great level. If you really, yesterday's high is way up there. I don't have really anything until I'm going to try and be patient, wait for this 45.40 area if I'm looking to short. We'll see what happens this morning. It's another 20 handles away. We got a few minutes left. Do we want to do we
All
got
right,
some more?
so this is what we're going to do. Since we got a bunch to go through, we're not going to do any levels. We're just going to say, do you like it or do you not like it? Of course, like always,
like
you guys
that
out
game.
there, you guys always out there, take your own levels, your own
Not or
investment
not.
decisions. Understand we're just going to play kind of a game here with these headlines.
Okay, game.
Let's
go.
roll it. All right. First one up, Wells Fargo's upgrade of DraftKings to overweight, raising price target to 37. You like it or you don't? I like it.
DraftKings, but I can't chase it.
I like it here. NFL season coming up. What do you think, Joel? You like it?
Shorting opportunity.
All right, let's keep it moving. Let's go to
Selling
Piper
profits.
I'm
Sandler's.
scared of that. I'm taking the other side of that.
Piper Sandler's upgrade on Monster Beverage to overweight, raising price target to 63. Do you like it? You don't like it? I say you like it. Charge up.
I say fade it. Monster
Fade
beverage.
it. Fade it. All right, Joel,
Ugly,
you like it?
Ugly red candle. There'll be
Yeah,
sellers.
I'd
into
sell
it.
this.
Yeah.
All right, what about you DWACers out there? DWAC trading higher, of
DWAC.
course, and pre-market at their former president Trump, Truth Social. Trump entering a plea of non-guilty, trying to bring the Supreme Court into this. And
I
it
really
is
thought
trading
he would
higher
have pleaded
here.
guilty.
Do you like it? I'll tell you
I don't
one
like
thing.
DWAC as a
I've never
stock.
liked it. I'll just keep moving
I'm
with
not.
that
It
one.
doesn't mean I'm selling it or shorting it. I just don't like it. So
I just
never
never liked it.
Yeah.
I think we need to clarify. We don't like it means we're not buying. If we do like it, means we're buying it. So
Yeah, it's
I'm
as
saying
simple
I
as
don't like
that.
it, I'm not buying it.
No comment.
Yellow Corporation files Chapter 11, but expects to repay all secured debt.
Oh my
Yell,
gosh.
the recent stock that was getting people to scratch their heads like, bankruptcy? Oh, the stock goes up 200, 300%, 500%, right? I don't like it, guys.
No, I mean it's down, and these stupid things like who could do anything. Maybe it squeezes and goes back up. I don't buy bankrupt companies.
All right, Lucid.
For today, what? You're skipping me now?
I'm moving. I'm moving
Joel,
fast.
Joel
Go
says
forward.
for
Go
today.
fast,
Joel
Joel. What
buying
you
the
got?
dip in yellow?
Yeah, I'll buy the dip in yellow.
He's buying the dip.
If
in
I was
bankrupt
short,
company.
it's just so hard. Like, but yeah, this thing was $5 the other day. Now it's under
That's true.
$2. I mean, it's got
I was
it.
like,
It's got
bullish.
Bullish.
All right, Lucid Group getting a little bit of a lift here in the pre-market after they dropped prices of 3 trims of Lucid Air EVs over the weekend. Lucid is scheduled to report after the bell today. I would sell this in a heartbeat.
I've hated Lucid since birth. I've had a $5 price target
Dennis,
on it.
we'll get right one day. We'll get right. We're gonna get this.
I don't
thing
have ever
down.
hit 5. It never did hit the 5. It got to
We'll get
546.
there. We'll get there.
I gave that when it was 50, when it was 40, when it was 30. I thought eventually it's going to 5. I got to 546. Didn't quite get there. I still think eventually it gets there, but I don't short into reports either, though. So a lot of people have been, long this and been hurt bad.
Not
a
a stock valid of my opinion.
Doesn't even warrant Joel's opinion. That's how much he dislikes Lucid.
All right, last one here. Man U is trading a little bit higher, but what I really wanted to bring in, this was an interesting attachment of Tom Brady announcing a minority investment in Thursday's champion English soccer club, Birmingham City, as more celebrities and athletes own stakes in professional teams. And we're keeping an eye on Man U, of course. They're still trying to sell this, right?
Yeah.
The Glazer family exploring sales of the team. Of course, they actually owned the Tampa Bay Bucks, right? The same family that owns Man
Malcolm
U.
Glazer. Malcolm
Yeah, the
Glazer.
Glazer family, they own it. And so a lot of people were thinking, well, why didn't Brady go to that? But hey, we'll see what happens here. Man U is getting the lift here.
I think you might get a bot eventually, but I don't chase stock, so I don't like it today. I like it on dips.
It filled the gap moving up. I mean, I'm not. If I was buying it, I'd try and work to buy today. But it's come down. It's also going to get taken out at some price. I don't know what
I
price
think
it
so
is.
too. Somebody's
So I'm
buying
like,
it
I'm not.
sometime.
You know, it'd be
Yeah.
ridiculous to sell or short this.
I
if
think it's
you
getting
know
taken
coming
out. I think
down.
we're going to see Man U gone in within. I'm gonna even say within 12 months. I think somebody's buying it.
All right. And like always, keep your eyes out for earnings stocks as we come to earnings this week. I'll put the calendar on the chart right here. Like always, you guys can get this calendar on our Twitter if you guys don't already have it. What are you guys looking forward to later in the week?
Oh, Palantir
Guys-
is exciting tonight. So
Okay.
let's see what they do with Palantir. It has been on an incredible run. It has run straight up into the report here as well. Not straight up into the report, I guess, but straight up for like 2 months. Sold off a little bit into the report. I mean, they're going to drop AI 10,000 times on that call, I'm sure. So I don't
Does
know.
AI
That's
matter
an interesting
anymore?
one. Yeah, well, I don't know. Palantir, maybe not. If they come out
That's
with
the fun
something
part.
new.
Yeah, they actually have to give me some numbers. I've been talking about this on my Twitter. Give me some numbers. Show me the money in AI. If you don't show me the money, I ain't believing it.
I'm very interested what Disney has to say on Wednesday. Still no position in
Disney.
Disney. Very interested because the parks were firing on all cylinders. Are they struggling now? I mean, Disney has so many problems here. I mean, that's gonna be the highlight of the week, really, is Disney's on Wednesday.
Oh, it's not, man. You guys don't.
What do you think the
It's
highlight of the
Thursday
week
and
is?
Friday. It's the CPI and the PPI. You guys.
No, we're not talking earnings.
You slept through the
Joel
whole show.
digresses.
Who cares about earnings? The earnings season, it's over. We got Apple. We got all these stocks.
Kind of,
We'll
I
get
guess.
some retail.
Yeah, you
It's
could
all
say
about
it.
the numbers at the end of the week. You guys go back to sleep, and we'll be back tomorrow morning.
Joel doesn't care about earnings. He just cares about the S&P futures. I care about earnings. Datadog looking at tomorrow. UPS tomorrow. Just give me the highlights. Twilio.
You know which one I think might
Upstart will
get
be
wrecked?
interesting.
Yeah, Upstart. I think Upstart gets
it's run so
wrecked.
far. I think if it pops, I think it gets sold. So
yeah, so that's going to be an
Upstart.
interesting one. But the hardest thing that I can't do, I don't know about you, Dennis, but I can't short into that report. Even though I think that it could come down,
No, I know.
I can't short into that report.
I think I would short the pop. I think if algos,
okay, like
maybe
if you saw a lift in the after hours before the report, like if they gave you like
the report comes out, I think it could pop on the report. And I think if you got guts, I don't have a lot of guts sometimes, but it's been the play to short some of these stocks on these reports.
I'll tell you, it's been hard for me to do that.
Shopify is a crazy, like that's it went to 68. It's going down again on Friday, 57. I mean, it just
I like the gap
stocks.
down
And the
below.
Shopify downfall again was when that president was on there and he was like dropping AI as many times as he possibly could, and then he's like so desperate to try to get the stock to go higher. He says Barbie. I was like, oh my gosh, this is just a sell when you're doing stuff.
I'm
like
looking for this gap fill. I'm looking for something in this gap for Shop. I wanted it at 40. I'll take it at 51 or 50. And so if it can come back to the level, if it can come back down that level, 51,
50 would be good. That's a good
then
level.
I can start using prior kind of resistance like 48, 49 to kind of risk off of. I need to get closer for Shop. I'm not buying it up here at 57, even though there's some support right underneath it at 57.
Yeah.
And of course, we'll have to keep watch also on Amazon because that had a decent move on Friday, but of course didn't really continue ripping, right? And so one thing I'm worried is that Amazon comes down into that gap zone, and that's how you get shopped through that support. So I'll be watching Amazon today to see if it comes back into this gap.
Did not sell any Amazon. It's the one that I've got still. I have to hold something. I sold half the AMD. You know, I sold a lot of stock. I sold more stocks on Friday on the pop. I sold Oxy. So I'm now out of my Oxy.
Oh, out of Oxy.
Gone.
All right.
And I was like, it went down to 62 today and then popped back up to 64 area. I was like, I'm gone. I'm going to get a shot, I think, back at 58. And I think I'm going to get a shot back at the 57, 58 zone. So I'm completely out of Oxy now. That was in there a long time. And then and it was good. I mean, we day trade off that 58, the Warren level. We traded it. Now I took the swing trade off and the longer term trade off. All here. Oxy 58 level paid us. So time to get paid, move on Oxy. Maybe it comes back to that Warren Buffett 57, 58 area. I'll reload. And then there was another one I sold. Oh, what else did I sell?
Did you get rid of PXD yet? Or you
No, I
still
held
got
PXD. It's my only oil stock left. I was like,
Nice.
I got to hold one. I like PXD. Look at the thing. Bounce right back again.
Yeah, I sold it on that
PXD
one
could
dip
get
day.
bought. That's why I'm like sticking with it.
Not a
I'm
bad
in
one.
from 215. I feel like this one could eventually get bought, but I sold something else on Friday. I can't remember. I was taking more risk off. It was another one that popped up, and everything was popping Friday morning. What the hell did I sell? I don't know. I have to look at the portfolio, but I'm sure I'm approaching 60% cash, which is the highest I've been in over a year. So, I mean, I'm nervous about this market. I've been saying I'm nervous. I'm like, I'm raising cash up on the long-term accounts, and I'm, leaning to the short side on a lot of my trading.
All right. I do still got XOM. Larry talking about that one. I'm going to just keep watching it. And I think the big level for me is it not coming back below this trend line here. So that's around the 106 area. And that's all this bearish time from May all the way into the recent break that we got towards 108. Just recently on Friday, we were up there towards 109. I think a move to 110 gets us completely out of this range. So that's what I think the bulls need to keep this going. Of course, a pullback to that trend line would be a little bit concerned, especially if we get back towards the 105. I'm in on XOM at 103.27. So ways away from here and can let the stock work. We'll see what happens.
You know what else I sold on Friday was my Micron.
There you go. That gave you enough time to take a look there.
Yeah,
Micron.
it was all over the place. It popped up. I was in this thing. It went up to like 75, and then they had the earnings, and it was up on the earnings, and then they disappointed, went all the way down to 60, and came all the way back up into the 70s. And I'm like, you know what? I'm just done. I'm done with Micron. It's too cyclical. It bounces around so dang much. It was a good trade I bought, or good, I made 3 or 4 points on it, I think. 3 points maybe. So it ended up working out at the end. I think I'm going to get a shot to get this back at 60.
All right, we'll see what happens there in Tesla today. Did you see any news on Tesla? I saw it was down about like 2%.
No, it's just kind of hanging out here.
Just
and
hanging
Tesla
out, right?
looks heavy to me. So if you want to do a technical, Tesla looks heavy. It looks like it wants to take out the 250. Sorry to the bulls here. I think the easy money has been made in Tesla. 150 to almost 300, doubled from May to July. Cool off period, I think. I think you got a date with the 240 double bottom that we had in June.
Nice.
Takes that out, you could have a date in the lower 200s. I actually think the Tesla chart looks very heavy to me.
I'm with the same exact Dennis Dick technical analysis there. You guys go ahead and, of course, check out my man Triple D Trader on Twitter. Give him a nice follow. Always good to have you, Dennis. Go do what you do best. And you did get some steak in you this weekend.
Oh
so
my gosh.
I know that you got some calories to burn off.
Feeling that steak.
So burn those calories.
Don't eat 40 ounces of steak in me, that's for sure.
And go get that trading action, Dennis. You have a great week, my friend.
See you guys.
All right, let's go ahead. Let's get you guys over to live trading. That's coming up next. You guys don't got to go anywhere for live trading action. You guys can just stick right here and continue going all through your trading day on Benzinga. We got live trading coming up next from 9:10 to 11. Then we got the Trader Bacon Show where you guys find out about traders getting all that bacon in the markets. And of course, later today, start swing trade 3:30. Don't miss it. I'll see you guys later today as I wrap up the market and get into all the market action. Of course, I take a look a lot at rotation, always trying to keep you guys involved with the sector outlook. So if you guys are interested in intermarket analysis and you want to learn more about that, how we can use sectors and industries to work backwards in the market versus how majority of people do, where they work forward in the market. They look at stocks that are up and then look to see why the industry and sector is up. No, I work it backwards. So find out all that on, of course, Start Swing Trade. That's what I love to do, of course, is trying to stick with the rotation and being quicker than most. All right, if you want to see that, that's at 3:30 later today. And, of course, our book club will be joining up on Tuesday. Don't miss that. That's tomorrow, 7:30 p.m. Eastern. Let's get to this market. Smash the like if you guys enjoyed Pre-Market Prep today. And I'll see you next time right here on Pre-Market Prep tomorrow morning. And, of course, Pre-Market Prep, we're always here to try to push you guys forward. And this is for informational purpose, not for investment advice. And host and guests may maintain positions in the securities discussed. Now to go to live trading, smash that like. You guys are always here where we leveled the playing field on Benzinga and grow your trading skills. Now to get you over to some live trading action, let's see what Lord Ryan can get into today and myself. We also got Nick Brown for some news, so come over, check it out.